What is up, YouTube? What is up, guys, and welcome back to another post-trading analysis video. And man, oh man, my voice is slowly leaving me because I have been talking and yelling all day in the TCT mentorship lectures. You will, you will all find them very soon or see them very soon here on YouTube. But I've been talking all day, but for some reason, when I start explaining stuff, I just start talking louder, fucking up my voice in the long term. But yeah, excited for those videos. They're finally coming to an end. Have to wait for a few external factors before I can release it, which is not in my hands. They have to do their job as well. So that will all be coming very soon. Discord community is coming very soon where we will be literally taking over. I cannot wait. There's not going to be a better community than us. Q4 2024 going to be absolutely nuts. But for now, we have the post-trading analysis. I want to go over some higher time frame on Bitcoin as well. First, we're going to talk about two trades that we took today. And it was on Euro and on Solana. Okay. Did I talk about Pepe? Yeah. We talked about Pepe and the missed trades yesterday. Or I'm tripping. Am I tripping? I am not sure. We'll see. I talked about it on X where. No, I talked about it on X where Asia took all our setups, man. That was a shame. Asia took literally all our setups. That sucks. But yeah, let's talk about Euro first, okay? So as always, we built some bigger context, okay? We built some context on the chart, and we can just see that we have been in this massive range. It's a massive range lasting literally almost 2 years now. And we came into the extreme premium pricing of the range, the upper section. We came into extreme supply, which was our last supply remaining before taking our range high. And from there, we got a 12-hour break of structure, as you can see right here, applying our market structure using the 6-candle rule. And we broke that. And what followed was a lower high for a lower low. Okay, that's expectational order flow. Even though we did have our 18-hour market structure still trending up, and we could have been forming and putting in a higher low on the 18 right here, this rejection of that supply zone, which was actually a market maker order block because it was the supply zone that was created while putting in this macro model 2 distribution schematic, rejected us very hard, indicating that that 12-hour structure was more likely to continue itself down, okay? And that's exactly what happened. And from there, we were hovering around that market structure low, but there's nothing that significant to hold price up in this area, okay? So I'm kind of curious what's going to happen when price is hovering around here and what direction the market will show us the upcoming days in this week. But I was just looking locally. It was Wednesday today, right? Yeah, it was Wednesday today. I'm even lost. I'm losing the days, bro. I'm losing the days. When you've been grinding so hard, you don't even know which day it is. Where did I come to the charts? Here, right there. Okay. Wednesday, 8 in the morning, I was checking my price action, and I was like, okay, we were definitely trending down coming into that low, so any first signs of strength will be breaking structure from top to bottom, right? So we have a low, we have lower highs and lower lows, making this our market structure high. Right here, making this our market structure high. Okay? Now, what we can see that this highs, if you scan through different time frames, it will look terrible. Look on the 2-hour, guys. On the 2-hour time frame, this is still valid structure, right? This is still valid structure, but look at that high. This is what I call an unfinished candle high, okay? And there's actually something from another trader that created a concept around unfinished highs and lows. And especially if you have it on the 2-hour, and you have those candles that don't have a wick towards the upside, you call it an unfinished high, and price loves to take those highs and reject from them. They oftentimes give pretty good rejections. So we were trending down, we took our 12-hour low, and that internal structure from top to bottom was also still pointing down, and we came up and we wicked that high. So that's not the biggest sign of any bullish continuations if we cannot even break our local structure after taking our bigger market structure low back to bullish, right? We kind of wicked it. But I was expecting it to wick it because we had those unfinished candles right here, okay? So zooming in on a lower time frame, what actually happened is that we created a range there. Okay, we created a range there. So applying our structure from bottom to top, we have higher lows and higher highs. Okay, and we created a range right here. Create a range right there. These are still on from the TCT mentorship. Let me not expose anything right now. But we had our range high, we had our range low, and we got the confirmation right here. Okay, right there we got the confirmation. And what happened from there is that we deviated our range low once right here. Let's extend it. We deviated our high, indicating a sign of a potential TCT distribution or a TCT accumulation. And then we deviate our low one more time. Okay, indicating a potential Model 1 accumulation schematic. The thing was, there wasn't really proper structure to confirm a good entry here. I'm on the 2-minute now. There was structure on the 1 actually. So there was structure on the 1, but it didn't look that good. It didn't look that good. So we had the low, we had the lower low, and we got that break of structure right here. It wasn't looking that good, and the deviation was very steep. So the moment I waited for that break right here is, if I have to put my stop above the low and I have to target the high, it's only a 1.24 risk to reward. And that wasn't really that significant for me, especially if I have to take into account that we also deviate the high already. So I have to watch out for a potential distribution coming into this supply zone. So we can kind of decrease that risk to reward towards that high, and you won't even have a 1-to-1. Guys, I am not trading anything under a 1-to-1. Okay? So I was just waiting patiently, because what I also realized while creating that Model 1 accumulation schematic, we left behind demand. We can see right here on the 2-minute, we have a very good looking demand zone. It's always nice when you have an order block right in that pivot point of your deviation, where price could be tapping into to confirm a potential bigger accumulation. Because if we zoom out on, let's say, the 10-minute, we could have a potential Model 1, flowing over into a Model 2 if we end up coming back for that demand zone right there, which is our extreme demand and therefore a requirement for the Model 2. Okay, if we want to have a requirement meeting of the first or the extreme liquidity grab, that will be right there, which is basically your first mark structure low trending from the low up. Okay, so what price ended up doing is we kind of were having like an internal distribution where you had a 1, you had a 2, and you had a 3, and you didn't even mitigate that order block. Okay, so no reason to really short. You could have short scalped it, but you're trading a very low time frame on a very low range, and you're trading an even local range within the tiny range. So I wouldn't know. Maybe if we tapped that supply zone, I would have given it a shot, because it could be a Y-Cov and a Y-Cov where you have a 1, 2, and a 3, and that will have a 1, 2, and a 3 as well, kind of indicating Y-Cov and Y-Cov. But I wasn't really feeling it. Price came down, and what I was feeling was this potential long where we have the Model 1 that is confirmed, and it hasn't tapped its target yet, and it can come back for a Model 2. This looks exactly that a trade I took on Euro not that long ago, where we had the exact same, just on a higher time frame. It was right here. Right here, we had a 1, we had a 2, we had a 3. So it's a Model 1 that was already confirmed. But when I zoom out on the 3-hour, right? When I zoom out on the 3-hour, it could turn into a bigger Model 2. A 1, a 2, and a 3, where this disappears, that second tab of the Model 1. And it was kind of the same right here, where, this local Y-Cov Model 1 that was already confirmed can turn into a bigger Model 2. TCT schematics flowing over into one another. So the moment we took this low right here, our third tab requirement was already met. Now we just need to wait for structure. And we got the perfect structure. Like, this is just, bro, this makes me so happy when you have that final structure that just has that 6 candle rule application to it, and you wait for that break. It gives you the best risk to rewards. So the moment we got the close above it, confirming the break, confirming also the bigger Model 2 schematic, you put your stop loss below the low, and then you target the high. I took 2 TPs. I took a TP here, and I took a TP here. Okay? Just because in case we had a harsh rejection from that 3-minute order block, I wanted to scale out. Okay? I wanted to scale out. And what I did, the moment we came up and price came back for the higher low for the higher high, I put my stop loss literally to break even because I was already trading a lower range, but we did have some buy side liquidity here, which gave a nice little return to zone, which is also nice. But it's just an amazing setup. Where the risk to reward is just amazing, right? The risk to reward is amazing, and you can kind of know how fast you can de-risk yourself once you put in that higher low for the higher high, mitigating that structure demand that you left behind. So absolutely very clean, local Model 1 flowing over into a Model 2, being aware of the potential distribution that could form, and nailing a 4% gain on the account. Like, it's so clean, so simple, so effective. You just have to execute it. You don't think twice. You can de-risk after 10 minutes of being in the trade, and then within 15 minutes your targets get hit. Like, it's absolutely beautiful. It's absolutely beautiful. Very easy trade for your mental well-being as well because you can de-risk so quickly. Now, we have to understand the bigger picture that either we break through this range high with absolute conviction and we start, kind of deviating that market structure low we were just talking about on the higher time frame, talking about this market structure low that has that dot on it, or we just start rejecting very hard. And if we start rejecting very hard and we have those unfinished candles there and we have that market structure high there, meaning we can't even break our most local structure from top to bottom, that's showing signs of weakness, right? So I was aware that this could turn into a distribution at any time because we already had that tab 1 deviation, right? Tab 1, tab 2, first deviation. Now, everyone knows here that, or at least if you have watched my TCT tutorials, which I highly suggest that you do, okay? Highly suggest you check out the TCT tutorials. But either way, the big mentorship is coming, which will overrule any video I've already made in the past on this channel. But I know it could have turned into a distribution. You always have to be aware that your accumulation turns into a distribution, especially on a key area on the chart like this, where we were at that most local market structure high, which will be our first signs of strength if we break it. Now, everyone should know that this is not a break. This is actually a deviation, right? Very clean deviation in around a 15-minute range, knowing that this could turn into a Model 1 distribution. In order to confirm it, the only thing we have to do is we have to check our structure, right? We have to check our structure. And right here, if we pull our structure from top to bottom or from bottom to top, we can see we have higher lows and higher highs coming into that high. And we broke that right not there because we SFP'd it first, and then we got the move away from the SFP, so we extend our market structure low to that low right there, and that's where we got our break. Now, I did not take this short. Why? The entry was right here. I would have to place my stop loss above the high. It would have only been a 1.4, but the thing that was bothering me the most is that in 30 minutes, we would have a news event. As you can see right here, we would have CPI, or it was PPI, or I think it was even both. We had CPI and PPI. We had a crazy news event, and I would rather not have my trade open during a news event when the direction is not that clear regarding liquidity. Only when I see liquidity pointing in really one direction, I will hold during the news. Yes, we had a confirmed TCT schematic and news completed to move down for sure. I would not want to risk it because there wasn't a clear liquidity direction, and maybe the wick could have gone here, stopped me out because of spreads, and then dumped down, right? And I would get a trade that was totally messed up while just having a nice 4% gain already, right? So it wasn't worth it for me to take this trade. It ended up working out, but who would have known that the news was going to do what it did, right? If I don't have liquidity obviously pointing in one direction, I am definitely more careful. But you can see right here that we had a perfect accumulation that went over into distribution at a crucial point in the chart, your most local market structure high from top to bottom, and we couldn't even break it. And from there, we got a rejection, right? We got a very harsh rejection, fixing those unfinished candles as well, which is just a nice little confluence for a potential distribution. It was just a news event. If there was no news, I would have taken it. It would have been a banger trade. But yeah, it was news, and yeah, so be it, right? So be it. So that was the trade on Euro. very simple. We traded the local range and we traded the extended accumulation schematic where the Model 1 went over into the Model 2. And you guys will be seeing me take the same trades. If you're new here, you'll be seeing me take the same trades every single time. It can be a bit different on each trade, but the generalized concept will always be the same, because this will just be a Model 1 flowing over into a Model 2 on the 10-minute. And right here, I took it on, I don't know, the 3-hour, right? But the generalized concept, it's the same. It's the same I do every time, just on different areas on the chart, depending on what the market gives us, okay? So that was my trade on Euro. Very simple, very effective. I also had one trade on Solana, which was a nice little short. You can see it right here. I want to go over it for a minute to build context. So what we had is we had this range, right? And coming into our demand zone, we had a Model 1 TCT accumulation schematic, okay? Where the target is the range high. And what did we have? We had a perfect rotation back up towards that range high, tapping that range high right there. Okay? Now, the way we came towards that range high, we created another range, right? So coming into that high, we had structure pointing up, higher lows and higher highs right here. And you can see the clear difference into this break of your structure high and this break. This is clearly a very aggressive break with a V-shape formation, and this is a very extended break that's not even a break, and it's a deviation, clearly indicating that you have a range right here. So we had a range at the upper section of our bigger range, and then we deviated that high during Asia. I posted about this morning. We had amazing setups on Pepe. It was like the picture perfect Model 2. So I will also go over that in this video real quick. But yeah, what we simply had is we completed our Model 1 schematic right here. That tapped its target. And from there, we had a short right at that high. And we broke down from the range, right? We broke down from the range coming into some sort of demand later on. But we broke down from the range, okay? We broke down from the range. And following our supply, or following our structure from the top down, we had low, lower high, lower low, lower high, lower low, okay? Leaving some nice little structure supply right here. Boom. What did price do? The generalized or the bigger context is the fact that we took that macro range high. Locally, we created a local range that gave us a very nice short play. We were leaving the range, and this could be a back test, right? This could be a back test of the range before having that rotation lower. Okay, that was my initial idea. Because especially even if this wanted to turn into a bigger accumulation, this is our extreme demand and this is our obvious trendline liquidity. So it would have to take this low to turn into a bigger Model 2 schematic where we have the Model 1 flowing over in that Model 2 and we have that nice running up effect. So we have potential to go lower, right? We have potential to go lower. And following our structure right here, we can see we're in the downtrend. When we're in the downtrend, we pull our range from bottom to top, just like this. And we can kind of see that we had a range low. We had our deviation 1, we had our deviation 2 right here, indicating a Model 1 TCT accumulation schematic. I didn't trade this accumulation schematic because it didn't really have a confirmation that good. Okay, so we had a confirmation. There wasn't good structure here, right? So from the highest point between tab 2 and tab 3, this is tab 1, this is tab 2, this is tab 3. From the highest point right here, we didn't really have good structure, right? It was kind of looking like this, where this was all very messy. So in order to confirm the rotation back up towards the range high, we would have to break it here just to target here. That's not a good risk to reward. Either way, we knew that news was coming at 2:30 USDT plus 2. So I was just kind of chilling it out. I was kind of waiting, making videos for you guys on the mentorship. But we also had a range high right here, okay? Let's extend this down now to that low. There we go. And what the news did, it kind of gave us not a clear direction. So what the news did is we went up and we deviated that high, kind of having a local 1, 2, and 3. And we came back down, tapping extreme demand, which was this local order block right here. This nice little pivot point candle, that's our extreme demand. kind of showing us that it can be a Model 1 flowing over in the Model 2, and then that one took that high again, mitigating that supply zone we were watching. Now, the bigger context is that we deviated our macro range high while breaking from our local range. So a lower high for a lower low could definitely be expected right here. Now we just need to wait for our structure confirmation that came right here. Okay, we need to wait for a structure confirmation that came right there to go short. That's exactly where I went short. I actually went short while making a lecture for you guys. So you can see that back in the mentorship. I didn't take the trade like in the mentorship, but you could see me kind of hesitate while explaining. It was pretty funny. But I was initially targeting for this low right here. I already had a nice gain on euro, and I was like, this is going to be a big banger, or I'm just going to get stopped at break even. So I took a tiny TP at this low, around 25%, trying to leave the other one run all the way down there, following your bigger range context. Also, I think around that volume area low, yeah. I was kind of aiming for these lows to get taken. That was basically it. Okay, I was aiming for those lows to get taken. I took a tiny TP at the range low. I think that netted me over like 0.4%. Yeah, so we had a 1.9, around a 2% gain. I took a 25%, netting me around, 0.5% gain. And then I moved my stop loss to break even. And then I got stopped out on this move up. Why? Because Bitcoin was actually showing some signs of strength, which I'm happy about because I just want to go up. I want to stop shorting. Just please let me long, okay? Please let me long. Let my portfolio go up. but yeah. It was a nice accumulation schematic that got extended, going over into a Model 1 that got the confirmation right there. Very clean. You could have scalped it just towards this range low. I just wanted to either have a big gain or kind of no gain or a little gain, whatever you want to call it. So it's kind of like a break even. It's a 0.5% gain. I'm not really counting that as a winner. It's kind of more like I tried to run it down further. Didn't work. Okay, didn't work. So those were my two trades. Very simple. I longed on euro, a Model 1 flowing over into a Model 2, and then I shorted a Model 1. Right? That was basically it. Now, going over into Pepe, by the way, don't forget Pepe. Going over into Pepe, bro. Pepe had the most picture perfect Model 2 schematic I have seen, and I want you guys to take notes. Okay, this is literally the definition of a picture perfect Model 2 TCT schematic. I know I'm talking faster now because it's late and I'm making this video for you guys because I can never get caught lacking because I'm built different, right? But I have been recording all day. So I kind of already think you guys understand it, but the knowledge hasn't been released yet. But everything is going to be clear when I release the mentorship. But for now, you can already watch my TCT tutorials that already go into how I trade. They're on my YouTube. Just type in TCT tutorial. You'll find them. They have the most views. Okay? But what we had right here on Pepe when building some context is, let's delete this. While building some context, we came into our extreme demand inside of this bigger range. So we are in this massive range right here, this being our entire range. And we came into that lower section of the range, tapping extreme demand right there, okay? Extreme demand because it's the last demand remaining before taking our range low. Now, our first signs of strength would be to break that high because that's our structure from the top down on around the 2-hour time frame, right? However, we wick the high. That's not a break. That's a sign of weakness. If you wick it, it's a sign of weakness. You want to break it, especially after such an aggressive move down and having all this buy-side liquidity above. You don't want to have trouble breaking that first high. So this range was already showing signs of weakness. Okay, it was already showing signs of weakness. But then we are just still trading the range. Now, checking our structure from the low up in this range, we kind of have a high, and we have a higher low, and we have a higher high. When we're trending up inside the range, we can have a range pool from top to bottom, range high, range low, and then we are dealt with this range in front of us. Now, why do I like this range so much? Well, we have our range high, we have our range low. But coming down from our range high to our range low, we left a curvature of buy-side liquidity, where you have all these highs that are a lower high comparing it to the previous one, and you have no supply, just liquidity, okay? So we have a nice liquidity trail from our high towards our range low, okay? And what does price do? It comes up, taking all that buy-side liquidity while leaving only sell-side liquidity below. So it shows what the market makers are doing. They're moving price up, taking all buy-side liquidity, which allows them to fill their short positions to potentially let price reverse, because once that first stop loss gets hit on this liquidity trail up, it will just be a cascade down, okay? Now, we always need to check for TCT schematics. What was even more beautiful is that we have a 5-minute order block right in that pivot point. Absolutely beautiful, okay? And not only that, we also have the most obvious liquidity point right below that order block, which are all these triple highs that are equal. So it's very easy. If price takes these highs and or mitigates that supply zone, we could have a valid third tap. Is there something to hold price up if we get a confirmation? No, because this is just one big liquidity trail. So the only thing you have to do is wait for the most local structure confirmation and short, because all the liquidity is pointing in one direction. You grabbed all buy-side liquidity here on this move up, and you grabbed all buy-side liquidity here on this move up while leaving all sell-side liquidity below. So when you understand that markets love to move from liquidity to liquidity, and all buy-side liquidity has been taken and all supply has been mitigated, there's only one way left for price to be heading to, and that's lower. So we go in the 1 minute, we wait for our structure confirmation, right? Following our structure, higher lows and higher highs using the 6 candle rule right here. And right here, we got that break of structure. And you know what's even more beautiful, guys? After that break of structure, after already mitigating extreme supply, we left behind a 1 minute supply zone. And price came back up for it. You know what this means? This means that the market maker is not leaving any order unfulfilled. Is not leaving any order unfulfilled. Every liquidity point has been taken from a buy-side liquidity perspective. Every supply has been mitigated. Like right in this moment, guys, there is zero reasons to go higher. Like I would not wait for this retrace. I would already short on the break right here, put my stop loss above the high. But man, when I see that rejection, I'm just adding more risk. And you can target all the way towards the bottom, guys. All the way towards the bottom for a 6 risk to reward. That's absolutely beautiful. Because if you think I will take this trade with a 1% risk, you're tripping. I will literally double or triple down on a trade like this. Triple down on the trade when you have a 6% gain. 6 RR, 6 risk to reward. You'll be done for 2 weeks of trading. If you make 18% net gain on your account, you are built different. And literally, only TCT concepts will give you these trades. I'm not even promoting anything because I'm giving it out on YouTube for free. Only TCT's concepts will give you RRs like this. It's absolutely nuts. Absolutely nuts. And look how smooth price came down. Why did price came down so smooth? Because there was nothing to hold price up. Okay, nothing to hold price up. Literally, guys, an A+ setup right here. Clear buy-side liquidity getting taken, no supply being unmitigated, and just getting that structure confirmation. A+ setup, note it down, and the next time you see it, absolutely triple down on that risk. Okay, non-financial advice. What else did we have? BTC. Let's talk about BTC for a moment because we could be entering a juicy area on the chart. Okay, could be entering a juicy area on the chart. Zooming out on BTC. Oh, I'm on the wrong chart. I was like, this is not my chart. There you go. Oh, I pressed the wrong chart again, bro. There you go. Okay. As you can see right here, what we could be having, right? What we could be having is a potential pointing or paying attention to our red dots, we could be having a model 1 that's flowing over into a model 2. Just like I've been discussing on the trade I took on Euro, right? I trade the exact same on every time frame. It works on every time frame, right? So this could be on the red dots. From the red dot perspective, we could be having a model 1 that's flowing over into a model 2 because this higher low for now meets the requirement. The problem is we need a sign of strength. We need a sign of strength. Yes, we got to move up, but we did not break any structure. So that high that I have on my chart is basically our market structure high. And we need to break that market structure high to confirm any forms of rotation. And with a market structure break, I do not mean take the high ever so slightly and go down. No, I want the high to get taken significantly, okay? Significantly. Having a tiny retrace and then going immediately higher again. That's proper signs of strength, okay? And we haven't been doing that. We had this one supply zone backing our market structure high or defending our market structure high, and we kind of rejected from it. But from here, we're kind of in a sandwich area where we have supply here and we have demand here, and we have literally been ranging in between. So I'm very, 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 very curious what price is going to do. I have an alert, as you can see, at that market structure high. I also have an alert in case we lose that demand zone low. But I'm very curious here because we're at a crucial area on the chart. But I would just absolutely love to continue this trend going up. I would just love for price to spike up, grab all that liquidity, mitigate or mitigate the supply zone, have a rejection, chill before having the next move up in late November or beginning November, late October, right? That's absolutely what I would love. Is it going to happen? I don't know. I couldn't tell you. All I'm saying is that this macro range is going to break towards the upside. I've been saying that for 100+ days now, the moment we started, and it's going to happen. Okay, it's going to happen. On the macro scale, this range is going to break towards the upside and not the downside. Why? Because it's an accumulation range. It's not a distribution range. If you know, you know. If you watch the TCT schematics, you know. Okay? So I'm looking at this for a potential nice accumulation schematic and hoping for some signs of strength here by breaking that high. And I'll try to find micro entries for macro targets. One thing I was discussing, or I was tagged into from Crypto Phoenix, I believe, was, hey, are you still bullish if we break this range towards the downside, potentially coming towards that 44K area? Now, we do have a demand zone right here. We do have a demand zone on this 44K area, which we could be tapping into in case we do lose this range. But this range will then not be lost, okay? It will not be a distribution range. Why? Because we've been deviating the low. We have been deviating the low over and over again, and it is completely fine for a accumulation schematic to potentially fail and therefore go over into a PO3, okay? So if we do lose this range, it's not over, in my opinion, because then I will probably think that this will go over into a PO3. I'm not thinking this PO3 is going to play out because I don't think that we're going to lose the range that aggressively and get, such a hard move down towards 44. But if it does happen, it's literally is going to put in this PO3. It's setting itself up for it to be the best PO3 ever if we do have that manipulation event, because this will cause ultimate fear, because I've been seeing even professionals like Jackass talk about if we lose this low, it is not good. You can expect the bounce maybe, but it's going to be for a lower high. And the people that short the lower high here are the same people that tried to long the higher low here when I called the PO3 right in that area. And I'm saying it and I'm telling you now, the same people that will be trying to short the lower high right here will be wrecked. And I was right here and I will be right here if it happens. Okay? So I'm already telling you this now. I'm just bidding. I'm just bidding, scaling into high conviction plays and making money. Trading, right? Because trading is still the ultimate freedom to life. People that just invest in crypto, what are they going to do when there's a bear market? Nothing. The only way to make money in the bear market is to trade, because you need to learn how to make money when prices are going down. And you can only make money when prices are going down by shorting. And you can only short good if you're a good trader. So watch these videos. I love all of you. TCT mentorship is coming soon. Discord is coming soon. Q4 of 2024 is going to change your life. 2025, your life will be different if you follow me, if you like, if you leave some love in the comments for good karma. And love all of you guys. Peace.